Good morning, traders. It's Kev here. Happy New Year. Happy 2020. Wishing you all the best. My first new video on YouTube about risk to reward, risk management. A fresh new video where I'm gonna explain you more on how to use risk management / risk to reward and to understand it. That's the most important part of this video. I'm gonna keep it very simple, so I'm gonna give you a few examples about how to apply risk management and risk to reward and how important it is to understand. We look into a simple chart, euro out, 4-hour time frame. We're gonna identify a couple of simple key levels where you see some opportunities in the market. First of all, we see a level right here, resistant level. We see some nice spikes of rejection in this resistant level. If you want to calculate your take profits in your stops, you need to know where to place them before you execute any trade, because that's very important. You want to know what you're gonna risk, and you want to know what your current reward can be. Okay, it's super important. Yeah, we see a level right here, many spikes through this level. So this is an interesting level to place a short, a possible short. If you put it in zone right here, you can see that it's a very interesting level. Okay, so we see that rejection spikes. From this point, we have the information that the price spiked through this level. If you look for a short opportunity, and we're going to use this simple and nice tool, we see an opportunity right here. Okay, but your stops should be on point. Very important. Okay, for example, you see that rejection spikes right here. You want to place a short right here. Most of the traders using a risk to reward ratio somewhere between 1 to 2, 1 to 3. Okay, so if you risking 10 pips and you aim for 20 pips, that is a 1 to 2 risk to reward ratio. I will note it down for you. 1 to 2 is 10 pip risk for 20 pip reward. Risk to reward. Super important. Pip rewards. This stuff is super important. Some of us using risk to reward 1 to 3 means you could risk 10 pips or even 20 pips for a reward that is greater than 30 or 60 pips. It's very simple, but it's important to know where you're going to place your stop loss and where you're going to put your take profits. So if you're entering this trade, I would place my stop at least above this last push, above this last liquidity spike. Okay, so push, rejection, more than likely there are a lot of buyers, retail buyers have entered the market right here, price pushing down, making a sort of fake out, back in the range, and you can see this is a nice opportunity right here. Okay, some of you will enter this trade, your stops above this last liquidity spike. Some of us would enter a little bit later and waiting for an engulfing, which is fine too, depending on your plan. I'm placing the stop somewhere here. Okay, keep in mind 30 pip something like 30 pip, 20 pip you could risk on this trade. Lower time frame, more than likely you can find a better execution, but it's not so important right now. It's important that you understand that you have to put a good risk to reward ratio. Okay, so 1 to 2, 1 to 3, and everything above is greater. But be happy with your 20 or 30 pips as reward if you have risking 10 pips, okay? Because some traders like to aim for big positions, which is fine too. And sometimes on Instagram or social media, you see also I catch the complete move 500 pips. Is amazing, but keep in mind the market owes you totally nothing. Okay, so me as scalper, I'm totally fine with a reward between 1 to 2, 1 to 3, with a great reward of sometimes 15 pips, sometimes 30 pips. It depends. Okay, so if we're checking this out and we have entered this trade and we're going for that for that 1 to 2, something like this. So this should be my first take profit level right here, which is somewhere between in the middle of the range, which is great, you know, which is totally fine. Okay, we're gonna give you another example. Euro out 4-hour time frame. You can see that the price is building up a level of support right here. So if you enter a trade like this, and we're gonna calculate again your levels. In this scenario, it would be more than likely a long. So your stops below those wicks, more than likely you enter somewhere within this level, okay? And as you can see, $30 pip risk for at least target is possible, and level of supply up front should be your first target. This is a nice scenario, as you can see. On the lower time frames, you can snipe those entries a little bit better, and you could use tighter stops. But I give an example on a higher time frame just to give you an idea on how to use risk to reward ratio in terms of Forex trading, okay? Super important. So if you're a Forex trader, make sure you're using a good risk to reward ratio, a good risk management. I'm gonna also give you an example on the risk management. What about the risk in your account? Let's do it. Calculator. Okay, so if you using for example €1,000 or dollar account, so this is your account, €1,000 or dollar, and you want to risk 2% of that account. That means that you can risk max $20, €20 of your account. Okay, if you're using a 2% risk, that is how you calculate it. So and your reward, if you're using a greater reward, you're using somewhere between 1 to 2 or 1 to 3. That means you risk $20 or €20 to gain $40. You know, is a 1 to 2 risk to reward. If you going for 1 to 3, it's $60. Okay. So more than likely you make 20 pips. You're risking 20 pips to gain even 30 or 40 pips, you know, to get that $40. And this is how you calculate it. So don't risk more than between half a percent to 3%, okay? You have traders that risk a little bit more, up to 5%, but it is their decision, okay? So if you like to risk it, do it. But I always recommend everybody to using the right risk to reward ratio, using the right risk management within Forex trading to protect your account balance, okay? Because the market owes you totally nothing, okay? Identify your levels, calculate your possible rewards, targets to next supply and demand zones or your next support and resistance levels, depends on what you trade. Yeah, this is a simple explanation on risk management. And we can do you another example. Let's do that. If we remove this stuff. Now, so we see this nice pullback right here. Dropping off. You see in a pullback. This is the pullback. We're seeing this. So more than likely you have another opportunity to short it. For example. Let's move to the lower time frames to give you a better idea. Because you can spot the waves better on the lower time frames for execution. Right here, more than likely you enter somewhere right here. After you see this pullback. It stops right here. So you risk 20 pips for a great reward of, you could aim for 70 pips, 60 pips, and then you have a risk to reward ratio from 1 to 3. So you have risking the 20 bucks to gain 60 bucks, okay? And if you're doing the 3 times, you're an overall winner. If you're losing after that 1 time, that's not a problem at all, because you have gained already 60, 120, 180 pips, you know. So it's great, you know. So you can, the next trade, the next 2 trades you win. The trade after you lose, but you're overall still a winner. You know, that is the idea from using a right risk to reward ratio within Forex trading, okay? To protect your total account balance. A lot of newbies traders using sometimes or risking their account and the half of the account. That means if you're losing 2 trades, you blow up your account. And this is also why I'm always saying you don't have to blow your account if you're using the right calculation within the risk management and risk to reward ratio. Okay? Because if you using a max risk of 3%, it will cost you a lot of trades, at least 30 trades to blow up your account, and you will never lose 30 trades in a row if you're using the right strategy. Okay? I'm a supply and demand trader. That is also what I teach within my course. So these are the really basics. But it is good to share. It is good to understand, you know. And there is a lot of free stuff on the internet as well. But yeah, this is also what I teach within my course. This is a little video about the risk reward risk management. I hope it helps you. Hope you all enjoy it. Don't forget to like my video, subscribe. Many more updates will come for 2020. More stuff about Forex trading and more knowledge, more free educational content. And if you like to enroll within the course, check out my website, link below or above. Check it out. Don't forget to subscribe, like, enjoy. Have a great day. Reading Skev, Forex Scalper.